All right, guys. Welcome. Welcome everyone to next webinar presented to you by Tanner Trade Group in partnership with Ninja Traders and also our special partners ETF funding for futures trading. So very excited for this webinar today, guys. We are going to have our special guest from Ninja Trader, Ryan.
Hey guys, hey everybody.
Yeah, we have Ryan James. We are gonna 1 second here. So they are going to go through, show us how to use this platform. James will talk about, teach us about the futures 101, basics of futures and how to use the Ninja Traders platform to trade futures and what is the trading futures all about. And then I will go through our key teachings about using various concepts that I teach day in day out how we trade, SPY, QQQ, and all those similar concepts that you can apply to Nasdaq 100 and SPX futures. And we will understand various concepts. Just like today is a great example to go through what just happened, what Trump said, and what happened, and how you could have made some decent trades. So we'll go through some live examples. I'll go through some key concepts. I did do this similar webinar for SPY QQQ a few months back. So we'll cover some of those concepts which you can use to trade the markets and use to trade the futures. And we'll look at some Ripster clouds and other indicators. And then we'll do some live example sessions. And then again, Ryan and James, they'll go through their platform. In the end, we have a special representative poll from ETF futures trader funding, who have a great, provide a great platform, a funded platform to trade futures. So he'll talk about that as well. So that being said, we also have Novel Turban Trader, our in-home futures expert. He will pitch in as well. If any questions you have on the futures trading. So let's start. So I'm going to hand this over to James, and then James from Ninja Trader, if you can introduce yourself, and then you can take over the screen and let's start.
All right. I think I'm ready to go. I took the screen. Rip, thank you for inviting me and Ryan. I am so incredibly impressed. You have brought in so many people to this event that it's Friday afternoon. I mean, the markets are closed. Everyone's going to happy hour. So this is a really great testament to you, Rip, and your followers are awesome. So we appreciate everybody being here with us today. So I'm going to go through my name is Jim Cagnina. You can call me James, but that's like what my mom calls me when she's mad at me. So Jim Cagnina will be good. I've been with Ninja Trader for about 4 years. I've been in the futures trading business my whole life, starting in the early '80s when I was on the floor of the Chicago Board of Trade. So I'm the elder in the room, but I've seen an awful lot of stuff and been through the transition to online futures trading from day one. These are great markets to trade. We're going to go through a kind of a brief PowerPoint, and I'm going to get to our trading platform, which really helps kind of explain it a little bit better. And we'll keep rolling. So in the meantime, any questions anybody has, pop them in. Futures, a lot of folks are scared of the futures markets. They think that, maybe there's it's a scary thing. It's not like it's out of the norm. It's a derivative. Futures are derivatives. They're not like equity, like the equity market where you have shares in individual stocks or you're trading ETFs. They're all similar, right? You put them on a chart. You do your technical analysis on the chart. And the futures markets track all sorts of different kind of asset classes, and we're going to get into that in a minute. But yeah, they are called derivatives, but that shouldn't be scary for anybody. It's a market, right? The price goes up, the price goes down, or the price stays the same. And those are the only three options. So, and they rarely stay the same, by the way. They're either going up or going down. They're very dynamic markets. They're very tradable, and they have an awful lot of volume, open interest in them as well. And we'll talk a little bit more about that. So that's kind of like the takeaway on this first page is there contracts where you have a buyer and a seller and you agree to certain conditions. Now, for most of us, most of us are either going to be day traders or position traders, and we're going to liquidate our positions long before the contract expires, right? All of us will do that. At least I have. I've never taken anything to actual settlement, and there's no oil tankers coming to my house with a whole bunch of crude oil. So don't let the contract thing fool you either. The contracts instead of shares, and as you'll see, there's quite a bit of, one contract is worth on an equivalent basis an awful lot of shares. So let's keep moving here. There's a hedge feature here as well. Futures hedge the price moves of company shares. So there's a couple different participants, right? There's retail traders like us. There's like us guys and girls, and there's institutional traders, right, and algos, and people who are speculators. Those are also speculators. And there's hedgers. There's people who use the products and the futures markets as part of their core business, and then they'll hedge their product in the futures market. That's where they'll go to protect themselves, protect their prices. Farmers are an obvious one. So, um, it's yes, the definition is a futures contract is a legal agreement to buy or sell an asset at a predetermined price. And the predetermined price is really, the exchange, the CME group is an example. They match trades, right? The best bid, the best offer. Those things get matched in real time on a FIFO basis, a first in, first out basis. Nobody has any preference, right? So if I wanted to do one contract, let's say in the E-mini S&P, and then I put my order in the order book, and then a big company comes in and wants to do 100 contracts, they're behind me in line, right? I'm in front of, they don't skip the line. There's no preference. It's first in, first out. It's completely fair and transparent. Which is one of the good things. And they're standardized contracts, right? That's a key feature. They're standardized contracts. And the E-mini S&P contract is worth the same amount on a tick for tick basis, on a point for point basis. For the guy who's, a person who's trading in Hong Kong versus the person who's trading in Austin, Texas. They see one marketplace, one standardized contract with a start date and an end date. Traded on regulated exchanges. This is a huge key feature, right? It's highly regulated by the CFTC, by the NFA, by the clearing firms themselves. There's counterparties to every trade. We won't get into the weeds and any of that stuff, but the good news is that there's a lot of investor protection here behind the scenes as well. Um, so a lot of the different markets, we'll go through when you see my trading platform, you'll see all the different markets that I track, and they're all the different asset classes, right? And there's stock index futures, there's currencies, there's the commodities, and commodities are cover a lot of ground, right? You could have energies as commodities, you could have grains, corn, wheat, soybeans, that kind of thing as commodities. And again, I'm going to show you a list of all of those as we get a little bit further along here. Um, we have an example here, agreement to buy 100 barrels of crude at $70 a barrel in 3 months. This is an example of kind of the concept of futures contracts, right? You could lock in a price right now if you would like to have, if you want to buy 100 barrels of crude right now at $70 and you get that price. 3 months later, when that expires, then you could take delivery of that crude, which isn't something me and you would do, but big institutions might, right? Big folks might. So that's kind of an example of an institutional
So,
investor, what they
so,
might
so,
do.
James, let me ask a simple question here. Because futures are new to a lot of other traders. So, if I have an agreement with you, let's say me and Ryan have an agreement that I'm gonna buy 100 barrels of crude at 70 barrel, so I can only take delivery after 3 months, right? The agreement says that you cannot take delivery right now. You can only take it at after 3 months. What if after 3 months the price of the barrel is $50? Then I'm paying more, right? So I'm losing money.
Yeah, well, right, exactly. Exactly. So you would only do that trade if you felt like the future price was going to be higher.
Oh, okay, okay. So we are trying to make a profit, just like how we do with other options or anything, that making a prediction that if the oil is going to be higher, of course 3 months is an expiry date, but it can be higher even in lesser than that time. And I will, if it's 100 a barrel by that time, so I make like $30 a barrel, just common term, right? So
Yeah, but again, the only folks that actually take delivery are the big
yeah.
institutions. So what we would do is, let's say that we bought crude at $70 and it expired in 3 months. Crude is a monthly contract. Every month you get a new contract. So we would roll over that initial purchase if we wanted to keep the position. Let's say we thought that it was going to $120. So what we would do is we'd sell before expiration, we'd sell this contract, which is called the front month. And then a new front month would start. We'd buy it back simultaneously. And then we'd have another 30 days where we could hold the position without having to roll over. It's very easy to do.
All right. Okay. Yeah, that helps, you know. So because I know
Yeah.
in reality, nobody's taking delivery. And for us, there
No.
is no delivery, physical delivery to take for S&P or NASDAQ futures, NASDAQ index. So yeah, that makes sense.
Yeah. Yeah. And those are cash settled. So if you did actually forget to liquidate a position and you have a position, then they just mark to market at the settlement date. And then that gets either as a credit or a debit processed into your account.
Okay. Naval, do you want to say something?
I just wanted to talk about this cash settlement and actual forward contracts, which James was mentioning. Like in simple words, like you took a crude example. I used to be work in investment banking, so we used to like deal with all the forex currencies. So when we
Yeah.
expect a currency pair to go high, we set up a forward contract that yes, by the end of this month, we are setting up this currency exchange rate. So whatever may be the currency going up, going down, we will have the contract executed at those currency rates. In simply those words. Uh,
Makes sense.
in in futures for equity and futures for indexes, they are cash settled. There is no delivery associated to that. For all the
Correct.
commodities like gold, for crude, for agriculture, soybean, they do have actual delivery fixed based on that. And they're all like specific instruments in the future called as forward contracts where we do all these things. And there's also swaps, but we'll not go into those things. But
Well,
from
we're glad we don't have to take delivery of anything, right?
yes.
Okay. Yeah.
All
Let's
right.
carry on, James. Thank
Yep.
you.
Thank you.
Sorry.
All
Yeah.
right. Okay. As we mentioned, there's different types of futures markets. They cover all the asset classes. And again, I'll go into more detail on those in a second. The most common is the stock index futures. Many of you already heard of the E-mini S&P and the E-mini NASDAQ, and maybe some of you have traded micros as well. So you have an E-mini S&P contract, and you also have I'd call it a sister brother contract, little brother contract called the micro E-mini S&P, which is just it's the same thing. It's based on the S&P 500 index, but it's a smaller size contract. So the barrier to entry is less from a initial capital point of view, and they're very popular, and there's a lot of volume in those markets as well. So different sized contracts for different markets. Depending on your account size and how aggressive or how conservative you'd like to trade. So the S&P 500 is the big one. The second biggest, the stock index futures are kind of number one. Number two probably would be gold futures from a retail trading point of view. A lot of folks are trading gold futures. And then lastly, not lastly, but the third most popular is probably uh, crude oil crude oil futures. So those are kind of the top three. But you could trade silver, you could trade treasuries. I came from the treasury bond pit back in the early 80s. I was in the 30-year treasury bond pit back in the day. There's something for everybody here as well. And you can see we got some corn and wheat on the screen as well.
Yeah. So
Um,
James, when it says 1 point equal to $50 or 1 point equal to $5, so let's explain to the audience what that means in a layman term.
yeah, so as an example, if you bought one E-mini S&P contract, let's say the price is 61.51. I'm just making it up, 61.51. And then the market goes your way 1 point, to 61.52. So you bought one contract at 61.51. You sold a contract at 61.52. You made 1 point. And that 1 point in the S&P is worth $50. And you can see on the screen. And then if you did the same trade on the micro S&P futures, right? You just did one contract and you made the same trade. You bought them at 61.51, you sold them at 61.52, then you would have made $5. So it's just a smaller size contract based on the same basis, which is the S&P index. The and the points though, it's broken. It trades in quarter points, right? So for the big S&P contract, you'll have each quarter point is worth $12.50. Four of those equals $50 per point. And of course, the opposite could happen. Let's say you sell a contract at 61.51 and then you buy it back at 61.52. It's going against you. You decide to get out. Then you lose $50. Does that make sense?
Yeah, perfect sense. So it's
Okay.
it's 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 actually it's way simpler. It's like every tick, how you make the profit. So that's why it's not that, it's not that complex when we get into it. If based upon like how we trade our stocks, every dollar is a dollar based upon $1 per share. Right
Yeah.
here, 1 point is 1 point on a contract. You will make $50 if S&P moves 1 point up. And if micro S&P moves 1 point up, you'll make $5, right? So more the range of the S&P, the more the profit based upon your risk reward or whatever. So yeah, perfect, makes sense. Thank you, James, for explaining that. Really appreciate it.
And
Yeah.
Ripa,
Yeah.
sorry, James, sorry to cut you off.
Yeah.
Uh, In very simple terms, like a person who's totally layman, this is the lot size.
Hmm.
When you need to trade options, you have a lot size of 100.
Right.
So here, just treat the futures lot this size. One size is like 50, and for micro, it's 5. For Nasdaq, it's 20. For
Hmm.
gold, it's 100. For natural gas, is 5,000. For silver, is like 2,000. So it's a different lot size.
Yeah.
And you multiply the number of lots with the lot size, you get your profit.
Yeah, but you will never, let's say, uh, at 1 point you will make or lose if the S&P moves 1 point up or 1 point down. You will make or lose 50. You will make 50 at least, or you lose 50 at least. So it makes
Correct.
things simpler. So yeah, easy to
Yes.
understand.
And also, like from a text perspective, this is much better. There is no wash sale involved in the futures. So it's the net profit or the net loss, which is there. Also, it is comparatively less taxable. Like I think 60-40% ratio is there on futures as compared to the equity.
All right. Cool.
Yeah,
All right, James.
and so a couple points you just brought up is, you could go long or you could go short in futures anytime you want. You don't have to, there's no uptick rule, there's no settlement. When you're day trading, let's say you bought five contracts, and then you sold five contracts, and then 5 seconds later you want to sell five more contracts. There's as long as there's margin in your account, you could do that all day long, right? So you don't have to wait. There's no waiting period. Again, you could go short whenever you want. You can go long whenever you want. So that's another kind of key feature here for folks that are maybe more active trading.
Yeah, definitely. We want to go long and short both. We don't just have a fixed bias if we are trading futures actively. If you were not, I will share a screen in a minute, and we'll still see how many points market fell today. And if you're not trading the downside, you would have missed a nice day today. So, yeah. Anyways, carry on, James.
Yeah, no worries. So, again, here's some more asset classes. And remember, there's cryptocurrency futures as well. The CME group recently introduced those. And again, there's a couple different sizes of Bitcoin contracts and Ether contracts as an example, that are becoming more and more popular. So they added that kind of, they call it cryptocurrency, which is the correct name. And so they added that not too long ago. So the CME group's really good at adding, new products when there's an appetite to trade those, and there certainly is in the cryptocurrency world. The currency futures, I think, as Naval mentioned, Currency futures, there's so many advantages to trade currency futures versus over-the-counter Forex. That's a whole different webinar. We'll be here until 10 o'clock at night if we go into that. But there's a ton of it's in my opinion, again, I've been doing this a long time. The currency futures is way better than over-the-counter Forex. So I'm glad we're behind that as well. Interest rates, you hear about the yield curve all the time. You hear about inverted yield curve, not inverted yield curve, the long end, the 10-year, the 30-year versus the Fed funds and the 2-year. All of those are tradable and very lot of volume in those markets in the futures market. So if you want to trade interest rate products, futures again, buy, sell, quick as you want, as slow as you want, however you want to do it. Precious metals, gold and silver, of course, everybody knows, is popular. Real quickly, standardized contracts, like I said, uh, the binding agreement, bullet point, I wouldn't freak out about that. I mean, that's just, when you open up a firm with a brokerage firm, whichever brokerage firm you want to open up, you're going to fund an account and then you're going to trade that account. You'll never see an agreement. You'll never see get an assignment. It's just you'll get a statement with a position if you keep a position open overnight. If you don't, you'll get a statement that shows all the trades you made that day. And then, if you're flat, maybe you'll be flat, maybe you won't be flat. But so that don't freak out about that. Um, the There's another level of market transparency also under market benefits here that we're going to talk about because you're going to be able to see the order book. And some of you might be familiar with a NASDAQ level two trading ladder in the equity world. They exist. But there's, in our opinion, a better trading ladder here through the futures markets because you see the entire market. You're not missing anything. You're not seeing ECN number one, ECN number two. You're not seeing, dark pools. It's just one place. All the orders go to one place. It's a centralized marketplace. Huge advantage because you could see the bids in the order book and you could see the offers in the order book. So that's a benefit. Expiration and trading cycles. Each contract has an expiration. So the E-mini and the S&P is an example. Those are quarterly expirations. So March, June, September, December. All that means is when a March contract expires or it gets toward expiration, then you just start trading the June contract. You pull it up on your trading platform and you'll see it right there. And it's just a different time frame, same market.
Yeah, that's why when we try to see the charts of the futures, right, it is a different name. The one that's expiring, then the one expiring later. Then they say VIX contract is expiring. There's something like that, right? So they say VIX, and we have a gap up. And what is the gap up and gap down, James? Is that when the
Yeah,
contract expires?
so when contracts expire, so there's there there's the time value of money. That's the difference between the futures market and then the underlying cash market,
Mhm.
right? And those tend to converge to even as the contract expires, that time value of money. But sometimes they don't converge perfectly, and you end up with a gap on that one day where the front month is expired and then a new front month starts.
Got it. Got it.
So, and those gaps, everyone has a different theory on gaps. Some folks think they always close, some think they don't. Sometimes it could take a long time to close. So that's a whole nother conversation. But so anyway, yeah, and we even talk about it here in the slide. I forgot trading strategies and rollover, but it's really simple. What I do is I have my quote board up, and I'll see the March S&P 500, and I'll have the June S&P 500 over it, and I'm looking at volume. Right? We want to trade the contract that has the most volume because we're going to get the tightest bid-ask spread, and we're going to get a better advantage in our entry. So that's kind of how, when we get close to expiration, then I'm looking at that to know the exact moment to roll over.
And James, I just want to
Yeah,
add a few things to what you were saying,
yeah,
like and answer Rip thing, that futures are made of an index, which is the underlying asset class. All right.
yeah,
So future runs on a premium or on a discount, right now in the last few years, you have seen futures running on a premium. But if you go back in the history, you will see the futures also run in the discount. It means that the people who are trading futures, they anticipate that yes, market can go down, and that's where they are paying discounts on those future contracts. On the day of expiry, right at 4 o'clock, future becomes the index and it's cash settled at that time.
Right, right. So yeah, it's just like the
Yeah.
option. It's if I want to compare it, I can compare it to like IV for an options, right? That close to the earnings, the options price is higher. So I guess futures or sometimes it's priced higher, like time value or whatever premium. So yeah,
Yes.
makes sense. And that's when it finally settles. Its intrinsic value in options. By the time the options expire, you lose all the time value, and they just they might be $5 in the morning and they settle at $1. So I guess it makes sense. So I understand what you mean when
Yes, and the
the
only
contract
difference
closes.
is that future can run on discounts, option cannot.
Got it, got it. All right,
Okay,
all
last
right.
point I wanted to make, sorry, the last point I wanted to make here was that we have a little note at the bottom here. No pattern day trade rule. That is true. There's, you don't need $25,000 and have to make so many trades and all of that stuff in a futures account. You fund it with risk capital, and we could talk about risk capital. It's very important to only fund your futures trading account with risk capital. My personal definition is money I can afford to lose, doesn't change my lifestyle or lengthen my retirement horizon. That's my personal definition. But I don't have to pony up $25,000 to try to force that to get rid of, to be that pattern day trade rule. So that's a huge, huge plus. You have the flexibility to trade whatever size you want based on what you could afford.
Yeah, makes sense. Yeah, we'll talk about it, yeah, in the end when we talk that, and that's a very important aspect.
Yeah. So sorry, Brian, I blew off slide 5. Hang
You're
in
good.
there. We're gonna
Keep
bring
plugging
Brian
along.
in a minute. Um, why trade futures instead of stocks? Well, I mean, there's so many more bullets here that aren't on here. And there's an idea that are more risky. And let me explain that. So, um, the notional value of one S&P contract, as an example, the notional value of one S&P contract would be would be the price of the contract. Let's say it's 61.50, and the multiplier, which in this case is $50. When you multiply those two things together, you get a notional value of $307,000. That's how much S&P you control with one contract, with one big S&P contract. So from that point of view, when you have a smaller amount of risk capital in your account, your leverage ratio is really big. And someone might say, well, this is a risky trade. And they'd be right. Now, but you have $50,000 in your account. So now that ratio is less, right? And then you could add to that, you could trade more than one contract. So you could get a little out of hand with the amount of leverage. And I always say that, leverage is a double-edged sword, right? It could work for you as well as against you. Everyone's heard that before. But usually when people max out on their day trade margins in futures trading, it results in badness. And my definition of badness is losing money. So whoever's telling you to do that, don't do it. This is my big advice for today. So yeah, it is it's a leverage transaction for sure, no doubt about it. And then in the equity world, maybe you'll get 2 to 1 on a stock, or if you're a pattern day trader, maybe you'll get a little bit more money you have to borrow to do the trade. Here, you don't have to do that. You don't have to
Yeah,
borrow to go short, by the way.
yeah, I mean, we can to talk about that risk. I think if let me try to put it and see if James I'm right. So SM SPY every tick we make or lose 50 points, right? So imagine SPY ticks down 100 points, right? So you're losing $5,000. Imagine SPY ticks down 1,000 points. So 1,000 points is what, $5,000, right? And if ES futures dip down even more, and you end up losing $20,000. But if you don't even have that amount to lose in your account, then it's I guess you get blown up, right? So that's the risk, right? Because these index futures, they can move in such a huge ranges that, one day they are just moving in 4 or 5 points. But if you are not careful, and I'm sure that's why they don't allow you to buy too much, right? That's where we talk about the margin risk, which I'm sure you will explain. But if you are not managing your risk, and suddenly there's some news comes out, and boom, have loaded, you are in 10 contracts, right? Which is like what, $500 per tick, and boom, you are down like instantly thousands and thousands of dollars, right? So is that right analysis of the risk?
Well, yes. I mean, but you're making an argument of why I love the micros so much, the micro E-mini S&P. So in your example, let's say it goes 100 points against you. The point size, and that's a big move in the futures, right? 100 points.
Right.
We've seen it. We've seen it.
Obviously, in COVID
But
times, I traded some futures in COVID times. Those at night, those were fun times. But so yeah,
yeah, but so right. So what
it's not
happens
normal. It's
is,
not in the normal market. It's a
yeah,
tight range. So I agree what you mean.
yeah. I mean, the 14-day average true range in the E-mini S&P today, I think, was like 78 points. So that would mean, let's just say it was 100 points. So if you sold the high and bought the low, you'd make 100 points, and a micro would be $500. Let's say you bought the high and sold the low, you didn't get out of your position, you kept it, then you lose $500 because it's a $5 point in the micro contracts, and that's my response to why would someone trade the micros? It's because it's a more
Yeah.
reasonable size contract.
Reasonable. It's the same way it can be high risk, but it's a good way to manage as well. It's because I was just looking at the ATR, which we'll go through the charts later. SPY's S&P futures are 81 ATR, 81 points, right? So if you are doing your due diligence, you're following the system and all that, you can easily have like less stressful. Let's say that it's kind of maybe a less stressful trades than you trade stocks and options sometimes. I say that's coming close to that, managing these positions, especially the micros, which only move $5. So hopefully that makes sense.
Yeah, totally.
Yeah.
Totally. So, Ryan, let's see.
Yeah.
Ryan, talk to us about contract size and expiration and margins and all that.
One thing before I do jump into it, one thing I wanted to say is, there's been a lot of questions about kind of trading hours in the chat that I've been seeing going off. So, um, markets do trade 23 hours of the day for futures markets. Obviously, there's the London session, Asian session. There's trading going on throughout the day. So to answer some of the questions that were going off in the chat, the markets will be closed for the weekend in 15 minutes. So Jim, I know we wanted to show some of the platform. So I think
Oh,
that would
yeah.
also I think that would also help answer a lot of the questions that people have, kind of just seeing it, being able to see the trading ladder and kind of see the motion
Yeah,
or
let's jump into that,
of the
but
market.
let's
Yeah,
just use this time and then,
yeah,
to show that, because market is, of course. And guys, for this webinar, our focus is mostly the trading, the futures in the market hours, right? So yes, go ahead, Ryan.
yeah. So obviously, regular trading hours are going to, depending on where you are in the United States, 8:30 to 3:30 for me here Central Time. Jim, you're on the East Coast, so you got the 9:30 to 4:30.
Whoa,
Um,
whoa, sorry
so
about that.
but markets will be closing here in 15 minutes for the weekend. Yeah, you can see it here on the trading hours here. But U.S. markets 24/5 Sunday night, 6 o'clock Eastern to 5 o'clock Eastern every single day. There's a 1 hour close for settlements that will go on for all of those contracts. We've talked about cash settlement and all of those things. So that hour is kind of the time for exchanges to make the settlements of all the trades and make sure that everybody's starting the trading day off right the next following day. And then again, markets open 5 o'clock at night, and you're trading all the way until 5 o'clock the next day. So extended hours, overnight sessions. There's obviously London, as I've hit on, and Asian markets. So there's a global accessibility to these futures markets. Obviously, volume is going to be much different in those overnight hours as compared to U.S. trading hours. The hours I think most of your users are typically trading, right? 8:30 to 3:30 Central, whatever that is. So Jim, you want to pull up the platform again, or if you have anything to touch on trading hours?
Yeah, real quick. This daily break from 4:15 to 4:30 is not a thing anymore. We trade right through it. Just in East Coast time, there's the break happens from 5 to 6 at night. And then the next session starts at 6 o'clock and it goes 23 hours. There's no, I like to make fun of, I like to say there's no irregular trading hours in futures, right? It's all regular trading hours for 23 hours straight. You could trade earnings information and news that happens at night, or maybe you just don't sleep at night. You want to make some trades. Moving over to the platform here, this is the NinjaTrader desktop platform. It is in my humble opinion, and it's won a whole bunch of awards, but in my humble opinion, it's the best desktop futures trading platform there is. We have a web-based trading platform if you want to use a web browser, and then there's a mobile app which is actually going to be relaunched any day now. It's really super slick, and they're all integrated together. The key feature in futures trading, though, what I really wanted to show everybody was this trading ladder here. This is called the depth of market, or you might be familiar with the NASDAQ level two. And the way or a price ladder it's called, you have prices in the middle, right? And that yellow highlight shows you where the last traded price is. And then on the left-hand column, the buy column, these are all the bids in the CME Group order book, right? There's 30, well, it moves around because it's dynamic and the market's still open, but 38 contracts are being bid at this price at 60, 62.50. So you can see the order book here. On the right-hand side is the sell column, and you can see all the offers in the order book. Bids on the left, offers on the right, how many contracts are in play. And as this moves around, it moves around. And one of the really cool features about being able to trade futures is the place to trade. I just click a mouse. Now I just sent an order to the exchange to sell a contract at 66.50. Or I could click the mouse on the buy side. I want to buy a contract here at this particular price. I want to cancel and replace my order. I could do that. So you have all of this ability on a trading ladder to do all sorts of stuff in addition to just click a trade. You could do bracket orders and trailing stops and all of that stuff. We don't have time to get into that as well. But this is
One
really
tick
where
is
the rubber meets.
the spread is one tick, or it doesn't matter?
Each price increment is one tick, right?
Yeah.
And at the bottom here, you could see my
Hmm.
P&L, my open P&L moving around,
Okay.
right? And
Okay.
I could, so I this darker
Yeah.
shade,
Is
that's my price. That's where I entered.
okay. Okay. Nice.
And then yellow is mark to market. Yellow is where the market is right now. So I'm going to go ahead and just put a profit target in. And
Got it.
now to place a stop, I'm going to place my sell stop below, right at my entry place. I'll just click it in there.
Are these micros or
These are big ones. So go to the
okay.
Yeah.
bottom and you'll see ES March 25. And
Okay.
then my quote board on the right, what I did with my quote board is I broke it up into asset classes. So I have the top, I have stock index futures, even the S&P, the Dow, the NASDAQ, equal weight futures, mid caps, Russell 2000, Nikkei, and then the DAX and the Euro Stock 50 from Europe. In currencies, I have Bitcoin and then all the major currency pairs listed. Currency pairs typically have a six in front of the symbol. And you can see the symbol has a date next to it. That's the contract month. So when I have my mouse over this Swiss franc, this is 6S, that's the Swiss franc US dollar pair. It says March 2025. I'm trading the March 2025 contract. You go down a little bit lower, energies, crude oil, nat gas, RBOB gasoline, metals, gold, silver primarily. Copper's a great market to trade. Somehow I have heating oil accidentally down here. It should be up in energy futures. All the interest rates, the 30-year bond, the 10-year note, the 5-year note, the 2-year note, and
The
even the
gold has been
yields.
good. Gold has been
Yeah.
going crazy. So I mean, gold has been
Yeah.
good, right? Yeah.
Yeah. Gold's been moving. And that's the thing, though. In futures trading, I don't care if it goes up or down because I can go short. I can go long.
Yeah.
I
Yeah. I
just got to
like
be,
that.
I want to be
Yeah.
right, though. And at the bottom, I have the grains, right? I have all the grains, soybeans, wheat, coin, oats, all the way down.
Yeah. I
Um,
mean, there's so many kind of futures a trader can trade, but if he really wants to build his, it's just my belief. If he really wants to build in his a niche, then he can just focus on few, like for example, today we're just going to focus on S&P and NQ. You just need to know what, like, focus on few, just like on stocks we focus on few stocks which we know in and out. Similarly, I guess you can focus on few of the future contracts which works for you, or your technicals or whatever. So
yeah,
yeah.
that's right. You got that's a great point. And the way I have this is a modular kind of trading platform, so you could kind of if you have multiple monitors, you could have multiple charts up, you could do all that stuff. But what I did was I linked the market analyzer to the chart. So if I decided, oh, I want to look at the Dow Jones instead, I click on my quote, and then everything else changes, right? The dome changes, the chart changes, and I could do that for any of the markets that I have highlighted here. And at the bottom, I have tabs, right? I'm looking at what is it, 30-minute chart. I could change it to a daily chart if my bar gets out of the way, my 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 bar at the bottom. I could change it to a weekly chart or customized charts if you want. So that's how I have mine laid out, but people could lay it out however you'd like. It's so modular and easy to kind of move around.
Pretty straightforward. Yeah. What else we want to
Yeah.
see before the market closes? Something that we really want to look at before the market closes. So I see, did you close your order? Did you already close it?
Yeah, we did close it. We could put
Okay.
another one on again if you want. It's really simple. I mean, I literally I could even go to market, just click
Uh-huh.
that market button, and then
Gotcha.
it gives me a market order, sends the trade. This one's not going my way. I'll put
Yeah.
my profit target up here. I'll put my stop down here with my
Mm,
mouse, and then I have a
mm.
trade, right? This is the anatomy of every trade in the
Yeah.
world: a
Yeah.
position,
Yeah.
profit target, and a stop loss.
Got it. Got it. I like that how you can see your charts on the side. By the way, guys, we're going to work partnering with the Ninja Trader and the coding and see if we can bring the Ripster Clouds on Ninja Trader. So that's going to be epic. But yeah, so beautiful. Pretty
Now
nice little tool. Mm.
Yeah, and you could place trades from the chart also if you want. So
Oh,
just
wow.
that's a whole
Yeah.
nother conversation, but
Yeah.
we could definitely do it. So multiple ways to place the trades. So this is this again, this has been around a long time. I've been in
Uh,
this business. I first met the Ninja Trader folks in the early 2000s. So almost over 20 years.
okay. And we can trade as many times as we want. We can go in and out 100 times, I guess.
Yep.
Okay.
Yeah,
Doesn't matter.
yeah, yeah. It doesn't. You're gonna, you know, as long as you have margin, right, to
Mm-hmm.
do it
Yeah.
in your account,
Yeah.
it does. Frequency doesn't matter. Now, as a general idea,
Hmm.
my experience is people do too many trades tend to get themselves in trouble.
Right, right. No, I was just, like you're restricted sometimes, but that makes sense. Of course, I don't know how the commissions work. We'll talk about that as well. I was once trading options in some, where I never realized I was paying dollar 50 commission for options, and they ended up being, hundred thousands of dollars for a month because we were used to trade so much options back in the day. So how does this? We want to talk about that later, or we can talk about that after the market close. I don't want to take that time.
Yeah, so yeah. I mean, this Ninja Trader platform is a multi-broker platform.
Hmm.
And so different, and evaluation services companies and different brokers, all sorts of folks use this platform, and even
Yeah,
folks who are trading equities use it as well.
got it.
So, from a commission point of view or a day trade margin point of view, we can't really speak to specific numbers, but we would say, hey, look around. It's, you got Google, search,
Hmm.
Ninja Trader brokers and then see what they offer in terms of commissions
Okay,
and
yeah, that makes sense.
day trade
Yeah,
margins.
I know Think or Swim takes I think $5 per tick. So if you're making $50 on two ticks, Think or Swim will take $10. That is TD Ameritrade.
Yeah, yeah, yeah.
Yeah,
It's Schwab now.
yeah, man, it's a mess now. But
Yeah, yeah,
anyways,
yeah, yeah.
yeah.
So,
Yeah.
and there's some firms that's not their specialty. I mean, Schwab is a huge company, right? And their
Hmm.
focus is probably something other than futures trading.
Yeah. 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 That's where I was
So,
used to trade on Thinkorswim. So I like this that we can trade on the chart. It's really nice. We can also put our pre-orders like when we are trading, when we'll go through um, the chart session. I really like that you can literally put your orders on the chart. I know you can do this with stocks on IBKR and Thinkorswim, but it's really nice to see.
Check out
yeah,
that
so I'll just,
volatility in 6C today.
Is Paul saying
Um,
something?
so
yeah.
I'm
Oh
just going to
yeah,
write,
just
Yeah, go ahead, Paul.
oh, I was just gonna say, show the audience the volatility in 6C, right? We got, we're introducing hello, Trump's back in. We're trading a Trump market where he's gonna
Yeah.
say that he's gonna get these tariffs on Mexico or Canada. And if, currency futures are your thing, right? You could be trading the peso or something, and you're getting a lot of
Is
volatility,
this the
right? And this
peso?
is
Is
just
the US Canadian peso or is the Canadian US?
so the
What is this?
6C is the
this is
Canadian,
this,
right?
yeah, this is the Canadian US dollar currency pair.
Yeah.
And, but that,
And this is how
Paul,
you're
that's a
making
great,
money, right? All this
well,
volatility, whether you go long or
Yeah.
short, you have great opportunity in futures.
Oh wow, yeah. So we were looking for like what we can trade for this tariff news, and I found an ETF which had no liquidity, and I was like, just trade SPY. But yeah, that's good to see, man. There's this 6C future. Thanks.
yeah. Right. And yeah, and you could move now the market's going to close in a minute, but if I wanted to put a stop loss, I don't know, we'll just do a buy stop up here to answer a question in the chat. Yeah, you just move the label to another price and click. It's that easy.
Yeah,
You just
yeah,
you just move it around. I mean,
yeah.
it's so powerful, this
Yeah.
software. I can't explain it.
Don't buy
I
it,
got to show
James.
it.
Don't buy it and accidentally swing it. And Trump comes and says there's no tariffs or something, and you wake up on Monday and either you make
We're
loss.
just joking.
Yeah, yeah, yeah.
Oh my
But
goodness. Anyway, and you can see my red light just went off, so the market's closed. So now we're going to
okay.
be closed. We're closed. There's nothing to do until Sunday night, right?
Hmm.
So, whatever you do Friday after we're done here, go hang out with family, friends, whatever you do. Saturday you relax. Sunday then you start getting geared up. Sunday night then you do you get in there again, and you
Yeah.
can start trading again at on
So
the open at
every
6
future,
p.m. East Coast time.
every exchange, future exchange, of course, I think internationals, Saturday, what all is closed on Saturday, Sunday? My question is there CME or everything in US?
CME, well, everything in the US, I think everything in London is closed on Saturday.
Okay.
Um, and even the Asian markets, although there's a 12-hour, it depends on where you live,
Yeah.
right? So,
They're talking about the Bitcoin and crypto futures. Would it be that would be closed out too, or you anything know about that?
yeah, that's a great comment, a great question. Yeah, so there's a little gap there, right? So you can trade cryptocurrencies all weekend long, right?
Right.
But the futures markets do have that hard stop at 5 p.m. and
I
they won't
see.
open again until Sunday. So for crypto, you get gaps all the time on the weekends, and that's why I'm like, all right, maybe you don't want to carry a position over on a Friday when you could just get back in on a Sunday night because you don't want that risk
All right.
exposure over the weekend.
Yeah. Okay. All right. So are they liquid enough, the crypto futures? Are they Bitcoin futures?
Yeah, so the contract that most of us would trade, let's see if it's up here. It did 211,000 contracts today, which is pretty good.
Wow.
That's there's a lot of volume there. Now, there's contracts that have more volume, and as you pointed out, because all the tariff stuff, some of these
Mm,
currencies went crazy. Like look at the Canadian dollar,
mm,
200.
mm,
Canadian dollar never does 289,000 contracts, so
mm.
it went a little crazy. But whenever you get a market that's doing, and I'm going to just kind of say more than 30,000 contracts a day, then enter on limit orders, exit on limit orders if you can. That's an okay market. But when you get in the hundred thousands, you're going to get some
Mm.
volume.
Got it. Got it. Okay. Yeah, that was really helpful. Very eye-opening. It's amazing. Love it.
Yep, yep, yep.
All right.
All right. All right.
Let's move
Any other
forward.
questions on the platform? We can go back to the PowerPoint and get you and Rip in here.
Yeah. Any other
Let's do
questions,
it.
guys, on the chat? Any questions on the platform? We are running a little behind. We have a lot to cover. All right. Trade or wait. You can trade on
Oh,
trade or
trade
wait.
it.
Hmm.
Yeah. So Ninja acquired Trade of It, right?
Yeah.
So Trade of It's an option for everybody. And then also Trading View is another software people use to trade as well, right? So
Yeah. We're gonna
whatever
go
your
through trading
software
view.
preference is your
Hmm.
preference. That I'm good by. Yeah, I'm cool by that, man. If you like another platform better than the one I'm showing you, hey, more power to you, man. I'm okay with that.
All right. Okay. All right, guys. What are the best hours to trade euro futures?
Well, that's a good one. That's a good question. So I'm going to give you East Coast times. So right now, I think so. I'm going to say there's a 2 in the morning open because remember the
Mm,
Euro FX versus the US dollar. There's two things going on. What happens to the euro and what happens to the US dollar? They're two different
yeah.
things that are wound up in
Yeah.
a ratio.
And people can trade either Forex or they can trade currency futures, right?
Yeah, if
So,
you're trading over the counter forex, I'm
mm,
sad. I'll be sad,
okay.
but that's another story. Okay,
Yeah.
so
Okay.
so the European Open, right? There's a good hour or two there. You
Mm,
that and most of us are sleeping, right? I'm sleeping at
yeah.
2 in the morning.
Yeah.
Nobody
But
is
then
like everybody who has
yeah,
options, they're watching the market.
okay, so there you go. So that's kind of some volume spikes there. Then it kind of slows down until you get to, the 8:30 news releases, right? The 8:30
Yeah.
news releases in the US and then the US Open, that picks up. And then usually in the afternoon, the currencies don't move that much. They're kind of slower. Europe's closed because they open 6 hours ahead of us. So you don't get that same amount of enthusiasm usually on a volume point of view
Mm,
when the New York Stock Exchange is closed for currency pairs, because the other half of the currency pair, those folks are sleeping.
Okay. Cool. All right. Let's move forward. Let's talk about pros and cons, James, right?
Yeah, I mean, there's a lot of stuff on this screen here that I'm
No,
not gonna
we,
go
we
through,
don't
but
we
Yeah.
don't we don't want to go through full, just high level what you think,
Yeah. I
yeah,
mean,
Yeah.
I think obviously leverage is going to be one of those main things for those options traders out there. Obviously, trading options is kind of getting leverage in the stock market. Futures kind of has that inherently built in. So that's, again, as Jim said, kind of a double-edged sword. So we need to be a little careful with the leverage that you're using and understanding these contracts and the tick values, point values that go along with it. And being able to properly manage that risk is can be very, very good for your trading. Extended trading hours is going to be another big pro for it. A perfect example of this week, we had all of the DeepSeek news, people not that happened on Sunday, Monday. Markets are closed. You can't really take advantage of those opportunities when it involves such a big move and is going to send ripples through markets. This is something you can take advantage of in futures, turn your platform on it and be trading that at an overnight session. So there's opportunities out there in those types of things as well. Um, Obviously, the wide range of contracts. We kind of touched on it with currencies, different ways to play different news headlines. I guess for lack of a better term, being able to, Trump has tariffs, being able to access, 6C as we talked about before, the Canadian dollar, and being able to trade that. Mexican pesos, whatever it comes with. Obviously, Trump likes to talk a lot, and it's very market moving news a lot of the time. So, giving you that ability to do that at any point of the day, not just during regular trading hours.
Yeah.
Um,
So Ryan, what is the
Anything else?
minimum amount? Minimum amount. I know different futures ask different leverage, but let's say if I want to start trading ES Mini, how much is the minimum amount of a person needs to deposit in his account?
So
so
obviously it's going to depend on the broker that you're
I
using.
see.
Each broker has different day trading margins.
Mm,
So, you know,
mm,
for example, NinjaTrader during regular market hours has day trading margins available to those users. Most brokers do have
mm,
those types of things. So $500 margin
Hmm.
for one contract of the S&P. I think that's kind of typical. I do believe Thinkorswim is a little bit higher than that.
Yeah.
But so different per
So,
brokerage.
so, so for those traders who have smaller accounts, who are struggling and they try to do these crazy option, get rich kind of follow people on those challenges. For them, I think it's a good alternative, right? If you have a smaller account, 2, 3 thousand, to try your hand on with futures, right? Because it's something new to learn and maybe a better option. Who knows? You become one of the best future traders out there. So that's a big pro I can see. What I have you have been telling us till right now, what we have been learning right now, that's definitely a big pro, is that people with limited amount of funding can still trade it and make a living on it or whatever, right?
Yeah,
Okay.
absolutely. And one other nice part about it too, especially with NinjaTrader, is the unlimited simulation feature. So
Mm-hmm.
if people are interested in these markets and learning about these markets, it's a great place to go and learn how to trade them. You can access live market data. You can
Mm.
actually just trade in a Sim 101 account, do everything that you normally would do, create a fake value of money, say
Okay.
that's $2,000, say that's 50 or
Yeah, you can
$100,000.
practice. Yeah.
you
Yeah.
you can practice, you can see the margin values in your account switch up, so you kind of get the
Yeah.
feel of what's going on. You see the margins and commissions being taken out when you place trades. So we always encourage people to start with practice trading.
And
Like, it is very important to
Got it.
practice trade futures before going live and actually risking capital. Very important aspect that I want to mention.
I would also recommend try micros in the
Yeah.
futures, like which are two lots, like lot size for Nasdaq and five for ES, and build your strategy. Try and execute multiple times,
Mm-hmm.
same thing. And once you have like the confidence that yes, your process runs, and you have confidence, also you need to be mindful of the stop losses here. Because if there's a gap up, gap down, and futures react very volatile. Like if there's a news, options, you will still have some chance, but future will simply like swipe your stop loss in a second and go.
All right.
So in
Yeah,
some cases,
that's
just
very
be careful
valuable.
of it.
Yeah, very valuable input. So there's an answer to that question. That Thinkorswim provides 3,000 for e-minis, I guess. So there's a one question here. I do want to move fast because we are running a little behind here. We have to go through the all the technical system as well. So I will ask one question that somebody asked here. Okay, can we trade options on future? What's that question? Ninja traded options on future. That's usually liquid.
Yes. No, they are very liquid.
Ah,
They are more
okay.
liquid.
Well, so yeah, we don't have futures options at this point.
Got it. Got it.
It's just going to be just straight futures
I mean,
contracts.
if I
Um,
want to trade options, I will just trade SPX options. I
yeah,
would I trade futures options. So okay, so let's
So
quickly.
reply, there's a difference.
Okay, let's
Futures,
listen. Yeah, go ahead.
for
Naval.
ES futures, you can trade options 23 hours a day.
Oh, okay, okay. Yeah. Oh, nice. Yeah, because
It's
SPX
not
we have
nice.
to
It,
be
it will
close.
make you addicted. That's the
Yeah, yeah.
problem.
No, no. I want to sleep, man. So it's
So
crazy.
it's 23 hours and it starts on 6 p.m. on Sunday evening and they continue until 5 p.m. today, Friday.
We are gonna be like the crypto addicts, man. Even trading
No, I've,
future. I
I've been
mean,
through this. It's very, very like
it's
addictive.
fun when we've had COVID, but with smaller when there's volatility, it's worth it. But when there's not much volatility, then it's just too much. Anyways, James, let's quickly breeze through next 3 slides so we can start with the technical educational part.
Yeah, absolutely. Benefits, high liquidity, leverage potential, hedging opportunities, access to diverse markets, centralized exchange with streaming real-time data. By the way, hedging opportunities also could work for individual investors. Let's say I have a big, I don't know, 401k with a big chunk of it, in the QQQs, and I'm worried about it breaking. Well, I'll go in my futures account, and I'll sell a contract to hedge it. So that's an example of how maybe a retail guy would hedge. Risk is, high leverage amplifies losses. That is true. Um, you know, mark to market, mark to market is good. because you see the real mark to market because it's based really on the last traded price. A little bit, I'm not 100% accurate, but that's pretty much it. So it does require active monitoring though. Pay attention to your trades, especially if you're day trading. Make sure you're in there because just like Paul said, hey, President Trump says something about Canada, everything goes haywire. Um, and I think we're going to focus the rest of this on the E-mini S&P or the SPX, and then the Nasdaq futures, QQQs.
Yeah.
Those two particular markets are very liquid, they're the two most popular markets. Let's just put it that way in futures trading. And so again, their basis is the indexes, right? The basis of the S&P futures is the S&P index, and the basis of the Nasdaq futures is the Nasdaq index, and they track efficiently, right? They track very, very efficiently, highly correlated. In the definitions of each, of course, I think it's down here in a bit. We'll talk about small cap and large cap. I'll get through this quickly since we're so far behind. Liquidity, market coverage, we already talked about. Volatility, yeah, volatility is again, you gotta be careful with it, but volatility is certainly, you get so many participants trading so many contracts, you're gonna get that volatility. We have the greatest tools in the world, I think, in NinjaTrader, accessibility and tools. And these markets are big with a lot of overall notional value, and they are strategically important. We talked about tick size already. The tick size in the E-mini S&P for the classic, I'll call the E-mini S&P the classic contract, and I'll call the micro E-mini S&P the micros. So in the classic contract, you have an index point of a 0.25, right? It trades in quarter points. We saw it on the trading ladder. Each tick is worth $12.50. A whole point is worth $50. Let's see, lot size, one E-mini S&P futures contract represents. Right, there's that 50 times multiplier. Remember, 50 times is the multiplier. You multiply that times the price, and that's your notional value. Oops. NASDAQ is a little bit smaller contract. It's a $20 point, $5 tick. It's also traded in quarter points. The micros are 1/10 the size. Remember, micros are always 1/10 the size of whatever the classic contracts are. So if whether you're looking at micro crude or micro nat gas or whatever it is, think 1/10. And then again, the notional value is 20 times whatever the price is. That's how much you control with one contract, whether you're long or
Yeah.
short.
That's the leverage, that's just the similar
Exactly.
leverage to with options. With one option, you control 100 shares. With one contract, similarly, one with future, you can go back there, James, one slide back quickly. What was the amount? Yeah. So it's 150,000 if, oh, wow. Yeah. So look at that
Well,
leverage.
so right
Amazing.
now though, right now, so let's see, what's the futures contract trading at right now? I lost my quote here. Hang on. Let me go
So
to my
that
NinjaTrader on my
so
phone.
what's
That'll
the
have it.
value of one contract?
Yeah, so NASDAQ is trading around, they settled around 21,571.
Yeah.
So let's just round it off to 21,500. You multiply that by 20. That's how much, that's the notional value. That's how much you of NASDAQ you control for the minis. So that's approximately, and I'm going to round off a little bit, that's approximately $400,000 of value. So again, the micros are 1/10 the size, so it'd be $40,000.
Okay. Okay. That makes sense. All right. So let's move on. Where are we now? Okay.
All
So yeah,
right.
that's fine. So now that we have James, I'm going to take over the screen here, so you can turn your
Yep.
screen off.
Okay, hang on.
Yeah.
You
So
got it, buddy.
yeah. Okay. So now that we have learned so much, Futures 101 and amazing NinjaTrader platform. So we have learned that. Now, how do we? So you know what future is, right? You can open an account and start trading futures. 5 ticks up, 5 ticks down. But how do we do it, right? Do you need? It's not that easy. That what you see on it's easy. Like I see, the futures market is even bigger. I see so many people right on YouTube, there, talking about futures because just people are selling indicators or buy this, automated algos. It's if we just talk about SPX and NASDAQ, it's very simple. You just need to understand few concepts. We trade SPY, the ETF, and we trade QQQ, the ETF, and of course, the futures are the same thing. So that's what I'm going to show you. You need to understand these few concepts. If you have been into our previous webinar, the SPY and QQQ for living, that 2.5 webinar that I did, which we have the PowerPoint and recording on our website. A lot of the concepts are going to be same to you, so it's going to be a refresher for you. But and of course, if you're my follower on Twitter, it's going to be refresh for you as well, because I speak about these things 10 times a day. I literally spoke about the dump today when we were having what was that this dump, so those which is actually great. Today's a great day to see that talk about this webinar when my screen is visible, right? Yeah. So talk about this webinar because of this dump right here, right? So that was Spike QQQ, and we'll go through the NASDAQ as well. But before we know, like in the community, everybody, I was preparing for the webinar, everybody killed it with this concepts, right? Everybody's profitable there with our system, Ripster Cloud System, but it's not that simple. You need to understand what if you're completely new, so pay attention here. So when you're trading SPY and QQQ, which is basically SPX and NASDAQ 100 futures, you first of all need to understand what are they? What are they made of? What do they consist of? A lot of traders don't even know that, because if you do not know the market overall structure of the market, you will be making decisions based upon the information you don't have. So you need to know the top 10 holdings in SPX and top 10 holdings in QQQ. Mostly they're Microsoft, Nvidia, Apple, Google. The difference in SPX, ES futures, is that it also has financials. So the banks are a big part of it. If tech is weak, but financials are strong, as SPY can still run, you can still make money on ES futures. But on the long side, but if finance is weak, then even if tech is strong, sometimes that can take over. But anyways, the top names are always the same: Microsoft, Apple, Nvidia, Amazon, AVGO, Meta, Google. And if you build this efficiency of tracking these names with the market, you will do pretty good. I have hundreds and hundreds of videos on the trading the market on YouTube. And even more than that, I'll show you examples on Twitter before and after how we use these same concepts every day. So anyways, just wanted to mention that you need to know if you are going to trade ES futures, even though they are the future contracts, right? But, they all move in the sync. So you need to know what are they made of before you even start trading futures. You need to know, futures, they're futures for the SPX contracts, SPX futures. Sorry, but what is SPX made of? And what will move that will make SPX move, and that will make ES futures move, and that what will make QQQ move. If you're trading NQ futures, you know that semiconductors are a big part, communications, cybersecurity, cloud stocks. So you need to know that. So that's important lesson one here. So anybody from the panelists, if you want to interrupt me, can interrupt me anytime, James or anybody else. I'm just trying to go fast here with these concepts. So, of course, the support and resistance. I'm going to go to the charts in a minute. Support and resistance is a basic concept. I hope everybody knows that. That is the most important concept. Either you're trading stocks or you're trading futures, doesn't really matter. The levels are levels. Yes, you can use SPY QQ levels to trade futures. You can use SPX levels futures, or you can draw your levels on futures as well. Whatever works. You just need to have a repeatable system. So every morning we draw pivot levels. We have daily and weekly levels. Pre-market high lows is a big concept, which we'll see in live in a bit here. Yesterday high lows are big concept. Remember, when you are trading futures, you want to avoid a choppy day. Of course, I mean, I believe sometimes advanced future traders might even be able to make profit in a choppy day. That's fine. But you have to have a trend day. What a trend day means is it's over yesterday highs, it's over pre-market highs. Excuse me. It is trading over. It's inside out candles are my favorite. If something is staying under pre-market highs and lows, then that thing is not going to work. What I mean by that is, let's go to the chart quickly here. So what I'm showing.
By the way, By the
Yeah,
way,
go.
Rip, if I could just pop in really quick. You're right on point with support and resistance. Support and resistance is like is in my mind the number one thing because
Yeah,
when you get to a support and resistance level, then you have to make a decision. Is that support and resistance level going to hold or is it going to break, right? What's the probabilities?
yeah.
So a lot of traders use floor pivots, pivot points as an example. A lot of people just do basic Japanese candlestick, analysis. Some folks, and I just started using gamma levels as well. So, whatever your method is, support and resistance has always been like the number one thing when I'm in the middle of a trade in the day.
You have to, yeah. So whatever works, my teachings have always been have it simple, right? Do not complicate stuff. Whatever you think works for you, you use that and you don't complicate it. For example, let's look here, right? So clean. So what was QQQ's doing this morning? I think there was a long hair in the community today as well. We were trading it. Let's see here. Initially we were rejecting. Let's look at our community page here, right? So we were breaking out, right? And that I said it should help Google and Tesla. That's QQQ because when I said it was trying, what was it really doing? It was getting out of this range. With your naked eye, you can see that if I push over this level, I'm going to push, right? And we usually risk below these candles. I'm going to talk about the indicators later, but I'm telling you the importance of that support and resistance. And you can see that. So what's the difference, right? You buy your NQ contracts based upon the same principle because even though NQ trades it's the same, 24 hours, but these are my pre-market levels, right? I can't tell it from my NQ chart, but this is my pre-market level. These are the levels, are very important levels which you use. If I'm not using that, if I'm just blindly trading, then I don't know. But if at the same time I know that Google is pushing, Tesla is pushing big part of QQQs, I can trade those NQ futures in a much better way. And same part will come to the short side. You could nail how many points was that? How many points was that, James? This was 21, 80, 50. What is it? It traded 300 points. So how many dollars
Yeah.
is ticks is that?
I mean, 300, that's, you multiply by 20.
Oh, wow.
You're looking at the NASDAQ, right?
Yeah. Okay, we'll go there
Yeah.
later. But what I wanted to talk about was this, right? So there's trade to be made. There's consistent, risk reward, defined risk and analysis to make a living or make money profit in the market where you define your risk with a repeatable setup. So this is one example. That's why I just want to focus your attention in day out, and no, every day will not be like that. If I go back, let's say I'm going back to the QQQs, if I go back and I look at my chart, some days we will have a choppiness, right? You don't want to get stuck in the choppiness. You want to see the trend and you want to see high probability. You want to see news. We'll go through that in a minute here. So key EMAs I use, which we will go through later, 50, 20, 55, 34. Opening levels are very important as well. Psychological levels are very important when SPX is trading at 500, 6,000, 5,000. SPY is trading at 400. QQQ is trading at 600. So you need to use those psychological levels to make your futures trading more effective as well. So I just want to show you the power of this breakout, which on a big picture level, because we are talking about this breakout, right? Let's see here. So back in June, when market was consolidating and everybody was calling top, 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 those people on Twitter who just think the market is going to boom and gloom, right? But it was a monthly candle breakout setup. The concepts are same. Either you invest long term. Let's say I'm buying this, ES futures, or I day trade. So this was on June. What was it? It was a monthly candle, right? Monthly candle. The concepts are same, daily, weekly, whatever, and intraday. And look at that when it starts to break out, and that's when I called it that's going to be a breakout. And look at that, right here, the breakout starts. And and then we keep going. Monthly candles keep pushing higher out of that range. So that's why the support resistance is the most important concept. You look at where it ended. It started from 422 and we went much higher, of course. But my point is these are small examples of the support and resistance. So if you are in the community, make sure you watch more in-depth support and resistance webinar. If you are not annual member there, then you can just watch my YouTube videos, 1,000+ YouTube videos, a lot of shorts, and you will become an expert support and resistance trader. Remember, price always moves in a set pattern. There's always a pivot, which means price will move big up or down. Clean your charts of all the indicators, less is more. Identify those support resistance, and you can literally make those trades. Okay, so this slide, very important. Macro dependency and the catalysts, consumer confidence, jobs report, ADP employment, note and bond auction. I give out this calendar every Sunday. We have it in our community as well. I tweet it out as well. CPI, GDP, PPI, Fed Chair Powell. This week he was horrible with the job, by the way. Sometimes you just have to sit on your hands when Powell is speaking. War news, geopolitical news, government news, sector news, trade tensions. Trade tensions we are seeing right now. So you could literally make so much, good trade with these kind of knowledge, right? If you know that trade tensions you combine the trade tensions with the system, and you have a profitable trade with you. And we'll talk about that in a bit here, but that those Ripster clouds, when I go into that, because I know a lot of new traders are here as well, but trade tensions right here, right? And so these concepts you need to know. You cannot trade S&P and NASDAQ and NQ futures if you do not understand these key concepts, okay? Federal Reserve rate decision, non-farm payrolls, earning surprises, because when I say earning surprises, S&P has 500 companies. ES futures will move based upon how those 500, most of those companies respond to the earnings. And, so you need to know that. Always keep eyes on US dollar, 10-year bond, 10-year yield. Recently, we have seen that when 10-year yield goes up, market takes a bit, right? And of course, sometimes you see the option flow, but this is important. If you start trading futures trading, make sure you track all these, understand all these macro events. This page again, the macro dependency, federal, same thing, fuels over the same things we discussed in last. And commodity prices, oil prices, gold commodity prices. If you are a oil or a gold futures trader, you really need to understand all these markets. I track gold because, when we buy gold, if my wife comes to me, hey, we need to buy gold, I tell her the chart is breaking out, let it pull back. So that's a good example. So you have to track these if you trade them. So those are those things. And then there's the treasury yields, yield curve, Chinese data, European data, VIX, and all that. So you need to, so it's everything is literally a chart, guys. Everything is literally a chart. And there's probably a corn chart out there. There is sugar chart out there. So everything is a chart. And that's how you have to track the prices. I mean, I gave you an example of gold. It's a chart. It's literally a chart. And it's funny if we talk about some things, we as a traders, we talk about technically, and I tell, hey, chart is breaking out, and the same is for the oil. If oil is breaking out, I mean, oil, when you trade oil, you have to follow these Mid Eastern news a lot. I'm sure, James, if you might know more about
Yeah,
it.
so right. So markets like crude oil, they're global benchmarks, right? We at the CME we have it's called the WTI light sweet crude. It has its specifications are published ahead of time. It's a lighter sweet crude. It's very desirable because it's not as sour as maybe the Middle Eastern crude or even the North Sea crude, but you get also you do have the geopolitical news that comes in. You got to pay attention to for sure. OPEC Plus is one of them. With trade sanctions with Russia and other places, very important to the flow of crude. But also the EIA, the Energy Information Administration, their website's EIA.gov.
Mm.
They publish weekly inventory reports, all sorts of beautiful, wonderful reports for all energies, whether you're trading natural gas, heating oil, gasoline, or crude. That's the main source of information, and they publish some great charts and some great data at EIA.gov.
EIA.gov. So the crude futures are how much is that tick again?
$10.
Okay, so I guess it's one of a lot of traders trade it, huh? Yeah,
Yeah, it's a yeah.
yeah, today we were
Very
trade.
volatile.
Oh,
It's very
very interesting. Yeah, we were today was we were trading. We had our earning trades. We were short on ExxonMobil and Chevron. So
Mm.
so
but like if you really want to trade natural gas is
I
much more.
see. Got it. Got it. Wow, man, there's so many new things to learn. Futures market.
Well, natural gas is not for beginners.
Fun.
That's
Okay.
a, that's a, that's something you got to graduate to. But there is with the micro natural gas futures, so that's something to think about too.
They call natural gas the widowmaker for a reason.
But I love it.
Yeah.
I was being
Um,
polite by saying not for beginners.
so somebody was somebody's we talking about gold. I want to talk something else. Is it the gold futures? What is it? GC? What's the
That's
Yeah.
ticker?
that's
Yeah. So gold chart is crazy, crazy breaking out.
yeah.
So if
Fundamentally, look at the monthly candle.
yeah. I mean, I don't know when their contracts expire, but if somebody was invested in gold futures, I mean,
I
he's
bought the
already
actual gold around 2000.
50% up. But what I was looking at, I'm little digressing here. Back from January to until 2016, gold was in a bear market, right?
Yep.
So those bear market lasts for a long time, and until this is the power of futures trading. I mean, you can see that the big picture trend. I was analyzing it. So that anybody who bought gold, of course, who bought gold back in the day, they did good. They look at this gold breakout. This is the technical breakout. I think I put it on Twitter as well. And it never looked back after breaking out of 2000 psychological level. And so do long-term investors put money in futures, or they just buy something else? Let's say I want to swing gold back in April 2024. Can I buy it and just hold it?
Yes. You just need to roll it
Well,
over. Yes.
you could, but you have to keep rolling it over,
I
right?
see, I
Because the
see, I see.
contract expires. So
Yeah,
typically you wouldn't, I mean, you could for sure, but just remember to
got
keep
it.
rolling it over.
Got it, got it, got it. Yeah, but anyway, so that I was something I was wanted to say about because I noticed there was a bear market on gold. These are monthly candles, so always use that. So, anyways, good information there to watch those oil. So this is the general things you need to watch. I'm not going to talk too much about this slide. It's about the market breadth, advancers and decliners. How many stocks are moving higher? How many stocks are moving lower? Those in the community will get the PowerPoint. They can go through it later. But you just want to see that if NASDAQ, if S&P has 500 stocks, how many stocks are upticking, how many are downticking. That generally gives you an idea of what the market is going to do. So based upon that knowledge, you can trade the futures. All right, guys. Big concept here, 10 a.m. concept. It's a very famous concept. You guys know that. I mean, a lot of traders already trade it. This is my 10 a.m. concept. 10 a.m. is crucial time when you're trading the markets or the futures or SPY or QQQ. The first 30 minutes are volatile, but between 10 to 10:30, either market rejects, either market tells us that it's going to chop all day, or markets finds a trend. I call it a 10 a.m. concept, but it is more in that it can be 10 a.m., 10:10, 10:15, 10:30. Doesn't really matter. So I will put a link in there. There's my free website there, ripstereducation.com. I have made this concept famous from last many 20 years actually now. So you will see that 10 a.m. right? What is this? 10 a.m. reversal, 10 a.m. 10 a.m. reversal, and these are all the stock charts. But I'll show what happens in the future. This is a 10 a.m. bounce, right? And because there's also sometimes a lot of data at 10 a.m. So there's so much information, so much, probability of something happening at 10 a.m. that you can literally make those 10 a.m. trades. We can maybe look here. Let's see here. Okay. So when I see something holding the trend after 10 a.m., I know we are good to go. So what was happening here was right after 10 a.m., SPY held the trend. It's not a chop. It's a trend day. That's what I mentioned on the Twitter this morning as well. When I mentioned that this is a trend day. Okay. Because of a simple 10 a.m. concept. We are getting out of pre-market highs and we're getting out of the range, and this is a trend day. So it's a trend day. You buy the NASDAQ futures. You let it work. Let's say you buy them right at the 10 a.m. breakout, right? Based upon your risk reward, how many ticks you can risk, because based on your account size, you let it work. And since the pre-market high breakout and since the 10 a.m. flag breakout, NASDAQ went into many points. Imagine being a futures trader there and just executing the 10 a.m. concept. And this is not just one example. I have thousands and thousands of examples. Don't have time on this webinar to go through, but you can literally go through and see that, or you can go to, I have probably 100 videos and real call outs, what happens at 10 a.m. It's a life-changing concept. Trust me. A lot of traders, use this concept when things, what was this? Let's look here. What was it? Yeah. So you see here, 10 a.m. This was just a few days ago. 10 a.m. it turned bullish right over Ripster Clouds. And what was the date? Let's look at NASDAQ futures there. January 28th, 10 a.m. Where is it? Okay, this might be back here. Let's see. This is 29th. Okay, what is this? Is this? Yeah, right here. So that was it. Look here. So we know that it's bouncing and it's turning bullish on Ripster Clouds here. And no, it's at 10 a.m. So how many points did that go? You can make a calculation, and even if it's SPY, it's the same thing. It's even if it's ES futures, guys, it doesn't really matter. So if you're sitting in Ninja Trader, you buy one lot and let it work. That's what you do. All right, so let's move forward. Let's see how the time we're doing on time. Okay, we need to wrap it up pretty soon, but we're almost close. Same is with VIX strategy, guys. Again, I have spoken about this strategy 100 times. So VIX, you don't need to understand VIX. It's a very complicated concept, but all you need to understand is when VIX breaks certain levels, the SPY will move in a certain way, and you can literally build a trading strategy, especially when VIX is over 18 and 20. It's a very volatile environment. I literally remember the levels 18, 20, 22, 25, 28, 30. They're huge levels, right? And again, you can go to ripstereducation.com. I have put those links there. You will see that what happens to the market when VIX goes other way. Let's see here. I can actually just show you today. Let's see. Let's look at today, right? We don't even need to go too far away. And people, and we in our community, everybody, we trade this. We live this concept day in, day out. Let's look here. Okay, let's look here. Let's go to VIX. So I told everyone today when market was dumping, since we are just talking futures, I'm just going to look at the futures. So let's say the futures or NASDAQ futures are dropping here, although VIX is related to SPY, but doesn't really matter here. So once the VIX turned bullish right here, what was it? 130? Right? And that's when it's breaking down. That tells me that we are not going to recover. We are not going to, I would short, I would sell the futures here. Also, it's also my cloud system. So look, I'm combining few concepts together to make a high probability trade. I'm not just dependent on one random indicator. No, or on some algo. I'm combining the concepts. So we just talked about the 10 a.m. concept, right? And here's the VIX concept. VIX is going higher. 15 big level. VIX is bullish. And I think I talked about, let's see what level I was talking about on VIX. I was away. So 16 big level. So what that means is once we break 16, VIX is going to push, market's going to dump, you hold your puts, you trade market short, you sell the NASDAQ, and, clouds are breaking, MTF clouds are breaking, and the VIX was still strong. So that's a simple VIX strategy, guys. I mean, I have literally spent thousands and thousands of hours on this strategy. It's not only applicable to NASDAQ, QQQ, the stocks, futures, everything. So if you give in your time to learn this strategy, you will make many successful trades. If you go on my website, you can see that literally people change their lives with another simple strategy. Reason I stress is that because I want people to get out of this mindset that something needs to be complex to make money or be profitable in the market. Even if it's not about making money or being profitable, it's about saving your hard-earned money, so you're making right decisions based on a high repeatable setup. So VIX 10 a.m. concept, this will give you a high repeatable concept to trade the market, trade the NASDAQ and QQQ futures. Let's quickly go through chop and trend. Chop is any time when the market goes up and down, up and down. The simple concept to learn here on the chop is, guys, 10 a.m. concept. If it pushes up to 10 a.m., the market's going to trend. You are okay. Usually you are okay to hold your future longs And if it's just over yesterday highs, usually it's good. It's a trend day. If market is stuck between those high lows, it might not be a good day to trade futures because you might get chopped up and down, right? So avoid any candle which is inside the previous candle. Always look for the candle that goes out of the previous candle. Much is better trade. So always look at the stocks. What are they doing? If Apple and Microsoft are not doing anything and other stocks are going up, you will think market's going to go up and it's going to dump right away because Apple dumps. So understand the movement of the key stocks. It's not that hard. People often complain, hey, it's not hard to tell chop after it's chop. I show every day. It's not that hard to even figure it out. You look at you don't trade. Just tell yourself you're not going to trade when it's inside day. Okay, I'm not going to trade when it's inside day on the candles. When it's outside day, I will trade, because when it's an outside candle, the stock is going to make a move. Inside you will see the chop. There are many examples where we will chop when there's inside. These were few choppy days inside, but once we start to break a range, then it's trend day. It's a bearish, bullish. You don't care. Yeah, go ahead.
Hey, Rip. Couple questions in the chat about inside day versus outside day. So if you want to just touch on that real quick.
All right, let's see here. Rip example inside, please, on the chart, please. Okay, let me find it. Okay, hold on. Give me a minute here.
It's right there, the fourth candle from the right.
Yeah. So this was inside day. You see this? All these candles. So this day most likely is choppy up and down, very low ATR. But look at this candle. You get long here, big push, right? So that is this again here. This day, when we are breaking the inside out range, we are in multiple range this day, and this is good. Even when this candle pushes over, let me make it big here. When this candle pushes over this candle, then you know that that's the time to to have it long. And you see when the price action is stuck between the previous candles, it's not going to work. I'm just trying to find some more live examples. Usually we have a saying that inside day stay away, right? Inside day stay away. I'm just trying to find a lot of, there's so many examples. Okay. Sometimes inside day will be okay, but most of the times when you have an inside day, it's a result in more chop. Yeah, there's a lot of videos out there. So for example, let's looking here. I'm waiting for this to get out of this range. Then I'm more confident that we're gonna go get long. If this doesn't break, the market's gonna chop up and down, and that will cause you. So look here, inside candle on SPY today, right? So that's when it breaks out that I get my inside out trade. So it's a very simple concept, guys. Nothing complex about it. I will tweet about a few things about it on the weekend. I just want to get through this pretty fast here. Going through the Ripster Cloud system quickly here. Ripster Cloud system is based upon EMAs. EMA has been there for a long time. Everybody uses EMAs, but what I use is the area between EMAs. The area between EMAs lets me define the trend, and EMAs act as a support and resistance. The stocks also bounce, the market also bounces and rejects from the EMA clouds as well. EMA clouds act as a trend identification, support and resistance, entry, exit signals, trading strategies, and a lot of my trading setups that I show you guys every day is based upon the EMA clouds and also the risk management. The golden concept is if on a 10-minute, so my system is 10-minute charts. My EMA cloud system is on 10-minute charts. So if you are trading futures based upon my system, then you have to use the 10-minute charts, right? If you are trading NQ futures on my system, then you have to use the 10-minute chart so that you stay in the trades longer. I guess when you're scalping, you may have a smaller time frame as well on your side. But as long as I see this, that 3450 EMA clouds are being held, so I'm bullish. Then comes the 512 EMA clouds. That keeps me in the trade. But then, of course, I think it's a pre-market. This also has a pre-market data, but we want to talk about more during the market data. And once you see this 3450 cloud breaks, it's bearish. It's that simple, guys. Nothing complicated about it, right? So, and the fight, as long as it stayed, if I sold NQ futures, I will not cover unless this turns back up. So let's see here. Yeah. So the other day we were doing a midday long, the calls. These are different setups. These are covered in different webinars. I don't have time to cover all those, but you can see that market sold off all day. In the community, we got long. Why we got long? We got a signal and it's not blindly following the indicators. It never works like that. You need to make a very educated decision based upon all the concepts brought together. I hate when somebody says that, hey, give me the indicator, go long and short. No, there's no easy money in the market. If you want to be a profitable trader, you have to make a calculated decision, understand the patterns and the personalities, because market has same personality that repeats again and again and again and again. You just need it. I usually give example of the Split movie, right? That guy has different personalities. So market every day has a different personality. Sometimes a choppy, sometimes a bearish trend. Sometimes it will dip at 10 a.m. and bounce. Sometimes it will bounce at 10 a.m. and reject unless there's news. So understand those personalities. And this time, this was a call that came in the middle of the day using Ripster Clouds. Very easy. I will share further on the Twitter. Yeah, you guys in the community will get again, you can go to ripstereducation.com. It's free there. But those in the community will have that in the webinar as well. Okay. So, all right. So a little bit more on the EMA clouds. 512 EMA tells you trend. 3450 EMA is the golden line of support. And yeah, so that's about the EMA cloud. So let's see how we're doing on the time. Okay, so let's quickly talk about the MTF clouds, guys. So MTF cloud is nothing but the daily EMAs. So there's this concept of daily EMAs. There are few daily EMAs which are very important. 2021 EMA, then we have 50, 50, 55 EMA. So we have all these EMAs on daily chart, but nobody used it for intraday trading. And so what I invented was I made this MTF indicator. What it did was, let's go here. So what it did was it brought those daily EMAs on my intraday chart, which tells me that I can make decisions based upon daily and 1 hour EMAs. What's going to be happening. It's the same thing. MTF clouds acts as a support and resistance. They act as a trend as well. This is a 1 hour. So there are three MTF clouds. One is in 1 hour 3450. The second is daily 2021, and then third is daily 5055. This is the complete suite of Ripster clouds, that I show you, and you will see that these clouds, a lot of times when it pushes over that 1 hour cloud, it will bounce. I'm just showing you the futures. I've never actually tested it on futures, but it's the same thing. Look here, 1 hour cloud, how beautifully the NASDAQ futures are holding that MTF clouds. And then once they break down, that tells me 1 hour is bearish. Bigger the time frame bearish. If 1 hour is bearish, it might not matter to a scalper, but to a swing trader, it may matter. Imagine you are a swing trader and you are short on NQ futures. You short under Ripster MTF cloud and you hold your short until the Ripster MTF cloud turned, or maybe you hold your short wherever your target is, right? So you can see that. So those are the Ripster MTF clouds. I tweet about it 100 times. We use it daily. Very simple concept, nothing crazy about it. So you can use that. Something else you can use on TradingView is my, let's see here. Let's look here. These are called, I'm going to show you quickly here, the Ripster trend labels. So if I go, these are for someone who cannot use the clouds, but let's say I go back here on Ripster trend labels, let's say. So I'm going to show you something here. Okay, so you see that this is futures. It's saying chop. It's built upon the pre-market levels. Watch how it turns from chop to continuous push. We also want to see where it's bullish right now, but it's in chop. Now it should push to that. Let's see. It goes there. See, turn bullish because, based upon the QQQ. But watch when the actions really starts. Oh, sorry. Let's start again here. Then, okay, so Ripster labels are going to tell us what's going to be. Okay, how do I move it forward? Okay, yeah, forward. Yeah. 1, 2, okay. Good, everything looking good. Now the warning signal starts. You see that 512's turned red. That's when I told everyone in the community, watch out. 512 is going to break. Watch out. Let's see here. Yeah. See, I said, watch out. 512 is going to break. And look what happens there. Let's go. Wait for the action. It reclaimed 512s. Now, boom, broke. That's it. What's Wix doing? Pushing higher. I have all the labels red. This is for somebody who can't really, you know, it's because people still try to dip. We don't dip buy. If it is doing this, I'm not buying NASDAQ futures. No, 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 because I want to preserve my money. Now I told everybody, watch the MTF clouds and what happens at that cloud. And then, it pushed under that as well. So guys, that's the Ripster trend labels you can use. So that's the complete suite of indicators you can use and use those concepts I teach you. And today, because we combined in NinjaTrader and this session all together, so that's why I can't go into a lot more detail, but it's a lot of it is covered in my YouTube videos and my other recaps. This is an example here as well. NQ futures 512 bullish, you long here, you get out here, you short here, get in here, and you have to learn all those concepts I talked about. This is Ripster MTF clouds bouncing right here. It's bullish. You get long on ES. Use the 10-minute chart. This is another bearish confirmation. There's example. So learn more. Watch the trade spike QQQ webinar as well. So that's all from my side from the educational part. James, I hope that made sense to you as well. The power of this system when we bring to NinjaTrader, it's going to be revolutionary and it's going to be fun. So we'll let James talk a little bit, and then I will invite Paul to talk about it. Paul is from Elite Trader Funding. They provide funded accounts for trading futures. And yeah, so who wants to take it? James, you want to talk something?
Yeah, so Rip, yeah, thank you. Yeah, I love the cloud system. It's I've been around a long time, and you have a very unique and powerful look at this. I think it's awesome. I'm looking forward to learning more about it. To be honest with you, yeah, the moving averages, and over the years, I've tried so many different just
Yeah.
regular EMAs, and it's it's
Yeah,
always
yeah.
not helpful.
No. Yeah, trust me, man. So the cloud system has literally changed thousands and thousands of lives, because
Yeah.
it's just so simple. Because the things become complicated because people think they need 100 things on their chart. They need something complex. It's not. And they need to stick with the system, right? So I use 10-minute system for intraday trading. Amazing. We have that. So if I show you something here, let's see here.
Ripai, thanks for this. I need to drop now.
Yeah,
Thank you.
Naval, thank you for joining and contributing, man. I appreciate it. So
Thank you.
so because we literally build those setups. If you go to our website on the trade recaps, all these setups are like thousands of examples based upon the system that we trade on the Ripster clouds. Same concept works for the stocks, same concept works for the futures. And these are all the live trades we do live on voice and screen share. I'm on the screen share all day. So if a person is really dedicated to give his 100% to a system, they can make it work. They can make it work for Nasdaq futures. So yeah, thank you so much, James. Paul, you want to speak now, or Ryan, you want to speak first? Do you have something? Yeah, you're mute, Ryan.
Sorry about that. No, I'm pretty good. I think you want to let Paul
Yeah.
get in here?
Yeah. And of course, if people want your contact in the end, like how to reach out to NinjaTrader, so maybe you give the contact in the end. But yes, Paul, please go ahead, introduce yourself and share.
Sure. First of all, thanks for the invite. This has been great and a ton of information. We work a lot with NinjaTrader, so I'm very familiar with their system, and I think it's great that we have a great working relationship. So to see this and being introduced to you guys puts a big smile on my face. one of the things I did want to talk about was that, Rip, you did touch about on, that's not about the end result. It's not about the making money. As traders, we may think that we jump into the market and we're looking to make money on that long or on that short, right? But what this is really about is finding that repeatable concept. What is your process? And can you stick to that process? Do you have the risk management to stay in the market long term, right? NinjaTrader touched a little bit on their great product of, yeah, they do have a practice account. They do have a paper trading service that you can get in there and try their simulations and really work through this. But when you're ready to move beyond that, do you want to jump out into the live market? Are you sure of your concept? Do you want to put skin in the game? Right. Well, it's good to get some skin in the game, but not have to lose your shirt in the process. And that is where we step in, right? We are an evaluation services firm, Elite Trader Funding. You can find us at etf.fund, right? You can use NinjaTrader with our services. We are teaming up with Rip and the team at Tenant to bring you some great deals. You will not find other types of evaluations at any other type of service that we have here, right? You can go to etf.fund, check out our products, and you will see that we have a lot of different types of evaluations. We've got evaluations for scalpers, right? The one step is one of our most popular type of evaluation, and those are for people who want to get in and out. They're not looking for that huge 15, 20 point move. They are getting in and out, taking their little chunk of the pie as the market moves, right? You may want something else that's different, like an end of day valuation, where you're fine with a little more drawdown because you want to work your trade. You have set your stop loss, you have set your take profit. Now it's time to let that trade work, right? And we even have something else that no one else has. We have a diamond hands evaluation. You want to get in for that big move, right? We were talking about gold. Have you seen how that has been moving? What about silver, right? Here's something you want to get in and hold through the night, through the weekend, right? Through any of the breaks that are happening. You can hold your position in these contracts with a diamond hands evaluation.
So Paul, how does that work? Like, for a simple person like who's new to futures, like when you give the accounts, so what's the process? They trade with
so right there, you can see this is our product page. So please take your time and look at it. You've got the one-step evaluation, you've got the fast track evaluations down below, you got the end of the day evaluations. The highlighted part, click for more details and read all the rules. That's really great to go in and see exactly how these evaluations work.
All right.
So when
you will give them a same account, and if they do good on that trading Nasdaq and as ES futures, they will be given a fully funded account, and they can trade with that real money. And if they are profitable, they will get the profits, right?
So how this works is, you go and you hit buy now. You click and you purchase one of those evaluations. You go and you look at the platforms offered. You want to sign up and get that NinjaTrader. You want to trade off the NinjaTrader platform. And then we will send you an email with how to connect your account and give you the full information of how to connect your account to your platform, and you are good to go. You are now trading an Elite Trader Funder evaluation, right? We give you how much profit you need to make, what is your max drawdown that you can have, and once you pass that evaluation, then you get an Elite Sim funded account. In that account, it's set up with the same parameters as the evaluation you just passed, but now you're on the road to earning payouts.
Got it.
This is
some
the big
person
thing,
was
right?
Some person was saying that these lot of funding firms do not pay out. So what are those concerns? If you want to address that concerns.
Yeah, you can go to our website. We've got a scrolling marquee of all the people that have taken payouts. You can go to our Discord and see the people that have taken payouts. They have special monikers for their Discord ID because they are proud. They went through that process. They got their Elite Sim funded account and they are getting payouts. And the great thing is once you get into that Elite Sim funded account, our risk team is watching you. How well are you doing? Are you a good risk manager? Are you sticking to those concepts, those repeatable processes that keep you in the market day after day? When we find those people, we invite them to that next level of moving to a live elite count.
Yeah. No,
right?
that's definitely,
This is the process. We don't want traders to just stick in this endless loop of evaluations. That is not what we're here for. We are here to bring people out of the simulation environment and put them in the live elite market trading so we can, prosper together. That is the benefit. We will help you get there and you help us, right? This is a partnership we're developing.
Yeah, no, definitely. So when I was invited by ETF to review, I was really impressed because the reason I was not into the futures because of all these doubts. But once I was talked to ETF and I reviewed a bit, and so I really felt good, and I thought that's a good partnership, and we can help a lot of traders. Of course, you have to follow the rules. You have to be realistic.
Right. Yes,
You
the
can't be
rules,
unrealistic.
right?
Nobody
Yeah,
is here
don't be
yeah.
trading over a VPN. Don't be
Yeah.
trying to hide and be anonymous. Don't be using like the VPS, hiding your IP,
Yeah.
right? We treat everyone the same. Here are the rules. You read them. This is the information. You follow the rules, you will get your money, right? We want to find these traders for sure.
Yeah, because there's nothing hidden in it. Because when you go to the stocks, right? For stocks, there's no prop firm. A lot of them do you CFDs. They do a lot of that. The futures are futures, right? It's the beauty of futures is that a lot of companies can provide a leverage to good traders. It's not hard to provide that leverage because they can control the risk. So there's nothing to like hide there. So I understand that. So yes, Paul, definitely thank you. So I'm sharing those contacts you gave us. If those who want to try, will encourage a lot of my community traders as well to try it out. It's nothing, there's no loss trying it out. Frankly, I want to trade futures when I see this. I want to try things out as well. It's another avenue of growth, and everybody should try it, right? And you have the system, you have the teachings, nothing to lose. So any other point?
Thanks, Rip. I really appreciate that. And I would stress to your audience and everyone here to read the rules, right? We have a great set of products, and I think that is the benefit that you will find with Elite Trader Funding. But read the rules. We have it all laid out there, and we invite you to come and try our products. If you see right there, you use the code Tenet ETF, you guys will get 80% off your first evaluation, right? And then when you come and you buy that evaluation with that Tenet ETF code, a lucky 10 users will get a code to where you will get no cost for an evaluation. So you are essentially dipping your toes into the futures market with no cost to you.
Yeah. And those who don't, those who want to use their own account, and of course, you can use Ninja Broker or also, but for anybody who doesn't want to risk their own money and try it out, it's a great opportunity. I don't see anything wrong with it, right? I have traded with my own accounts on Thinkorswim, but if I needed to, it's good. But is it available in Canada, Paul? It's a big question by everyone.
Yes. Yeah, we've got traders around the world.
All right.
We have a portion on our market that or on our website that you can go and see restricted countries, right? All that information can be in our FAQ and our help center. We have that list. But yes, we've got traders in Canada. We've got traders in countries
no PDT.
that I would have never imagined that people are contacting us wanting to trade futures. And it's a beautiful thing. This market runs 23 hours a day, 5 days a week, opening up on Sunday night. There are people around the world that are having a blast trading futures. And I invite you to come give us a try.
I personally think it's a little stress-free trading than stocks and options. So that's nice. Hey, thanks, Jam. He uses my system to trade the prop firms. Thanks, man. I appreciate it. So system works. It has changed thousands and thousands of lives. That's why I'm standing right in front of you. So that's why I'm trying to extend the beauty of the system to everybody they can use, right? Beauty of the system. You don't need to be in my community. You're welcome to join my community as well if you want to learn more, but all the education is out there. So use this opportunity to learn about futures, learn about NinjaTrader, learn about the opportunities that the funding firm like ETF provides, right? So make there is opportunities out there. Just dedication, just give your 100%, and there is nothing that cannot be achieved.
That's
All
right.
right. Yeah. What else there?
Rip,
Yeah.
thank you for having us. This has been awesome.
Yes, sir. Of course. And anybody who is not in the community, this webinar is going to go into my community library where we have over 30 plus webinars, PowerPoints with repeatable system and setups, unlike anyone. When I say there's no one who has education like I have, I'm really proud of that. So this webinar will go there with all the other PowerPoints and presentations. Anybody who's out of the community, want to join the community, I think our team is running a flash sale. You can join that as well. We have tools which are freely available in the community that are worth $500-$600 free a month. So you cut everything you have. If you're an active trader, you will not find a better family of traders anywhere else. So yeah, so that's the end pitch on our education community, and you can always go to ripstereducation.com for all the free education, and my Twitter and the YouTube Ripster Tanet Trade Group as well. All right, guys. So hopefully everybody gained a lot from this webinar. And, thank you, James, Ryan from Ninja, Paul. I appreciate you guys coming in. Looking forward to a great partnership. I'm going to start, focusing on futures. I'm going to live stream the futures in my community as well. And anybody, I'm going to make a futures room in my trading community for those who want to start trading futures. So that's an announcement. So I'm going to create a futures room. I have a lot of experienced future traders who have been asking me about that. So they'll be there as well. And we will, the promo code for the Tanet members is Tanet ETF. That's the promo code. Anybody who wants to try out ETF funding, their promo code is Tanet ETF. I think you have nothing to lose there. It's if not, it's
80% off.
Yeah, 80% off. I think it's not, if nothing, it's fun, right? It's really nice. I just love the beauty that I can trade the volatility with no risks of my option expiry, no risk of the spreads on the stocks and ETFs, so I like the pros there, and I can just have a small position and make a cup of coffee. So there you go. I'm going to provide my daily levels for future from Monday. We will be providing daily levels from NQ and ES. So officially the start of guiding the traders on NQ and futures, I'm starting it from Monday. So yes, so if you're a futures trader, you're welcome to join. We are expanding the education, the system to futures trading. I'm going to also partner with ETF, do more educational sessions with them. I'm also partnering more with NinjaTrader, and we are going to do a lot of future events as well. So thank you who everybody joined. I see a lot of people left early, but those who stuck around, I appreciate you guys. And the webinar will go in the community as well. Most of the community, I think, traders didn't join because they get the recordings and the PowerPoints. But see you guys. Thank you so much.
Thank you, Rip. Really
All right,
appreciate
James,
it.
Ryan. Thank you.
Ryan,
Thanks,
great
guys.
seeing you
All good,
guys.
Sid.
Yeah.
Thanks,
Have a great
guys.
weekend, everyone.
Have a good weekend.
Yeah,
Of
I will
course.
tweet.
Bye-bye.
We will tweet out the Elite Trade funding. Anybody who wants to join them, so that you don't miss it. Okay. Thank you. Take care. Bye bye.
Take care, all.
All right. All right. Let's turn thing off first. I always forget it. Yeah, here you go.
That was awesome.
Yeah. Thanks for doing that.
1 second here.